is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. It's a very exciting time in the world of Bitcoin ETFs. For several days, we've seen increasing outflows of Bitcoin from the GBTC fund, which for the first few days was matched by inflows into the other large ETF providers. What happened more recently, though, is that outflows started to outpace inflows, and that I think got a lot of people spooked. Fortunately, we've seen that start to taper off a little bit. A couple of research notes from some of the investment banks saying they thought the selling was mostly done. And then yesterday meeting on Monday, January 29th, we saw a day of pretty healthy net inflows, I think over $250 million. So that's caused the price of Bitcoin to find a level here, sort of well above the $40,000 range. Remember, for a period of time, like after the sort of sell the news event occurred, we saw the price go below $40,000. So with let's assume for a second that overall the aggregate flows going forward will be modestly positive to very positive. It's a big assumption, but let's just assume that there aren't net outflows. I think in that scenario, people will begin to turn their attention to some other upcoming catalysts. Now, I think very much this rally is still being driven by, these specific price-related catalysts. We've seen that with the Bitcoin ETF, causing a pretty meaningful rally right into that news. And now I think the next big piece of news that I think people are quite interested in is the halving. Now, this is something that for our new listeners is an event that happens periodically every few years, where the block reward, that is to say the amount of new Bitcoin that is issued periodically to miners for providing computing power to secure the network, gets cut in half. And a lot of people associate that with rallies. Now, this is an asset class that's only 14 years old and has only really had a marketplace for 11 years. So we can only point to maybe 3 times in the past where this has happened. But 3 times is enough to make a trend. And I think a lot of folks are now questioning whether or not the next halving is going to be an event to help kickstart another leg of this rally. So, Andrew, this is a topic that's near and dear to your heart, I think. It's one of those things that we've discussed on prediction shows, on our outlook for this year as one of the big things you're really excited about or looking forward to. So why don't you tell us a little bit about how you think the market is going to position itself ahead of this event, what kind of impact it's going to have, where we go from here?
Yeah, totally. I mean, the Bitcoin halving, exactly like you said, it takes place every 4 years. The amount of, essentially it just changes the amount of new Bitcoin issued every block as inflation. So we're going from 6.25 to 3.125. Historically, what's happened with the halving is it essentially is kind of like the ringing of the bell of the new crypto bull market. At least again, sample size of 3. I believe the Bitcoin halvings last were end of November in 2012. That was right before a crazy 2013 where Bitcoin I think 20x and hit $1,000 for the first time. July 9th in 2016, which was 2017 was a huge crazy year where Bitcoin again kind of, I'm not sure about 20x, but almost 20x from $1,000 to 20,000. And then of course May 2020, which was perfectly timed with sort of the interest rate cutting cycle during COVID, where Bitcoin hit $69,000 from a low of kind of like 5 in the previous bear market. So yeah, it's crazy because it just seems to always happen when Bitcoin is down somewhat significantly from its all-time high, assuming that we don't make new all-time highs the next kind of 3 months, as the halving scheduled for April 22nd. So yeah, only less than 90 days away now, which is pretty crazy. And yeah, I mean, it's just, if you look at the chart, like it's just been huge rallies in the sort of 12 to 18 months post halving. The last 3 times this has happened. And the reason why is it's effectively like a tokenomics upgrade effectively for Bitcoin, in the sense that there's less inflation, and therefore that reduces the amount of selling.
Yeah.
And then it also seems to act as kind of like a both for reducing supply, but then also sort of like the meme effect of the halving seems to increase demand as well. And so yeah, so it tends to be a big catalyst, I guess, on both the supply side and the demand side. One thing to take into account, though, is, again, we're using a sample size of 3 here, but the effect has been lower each time in terms of like the price gains post halving. And that's also,
like percentage returns, right?
yeah, percentage returns. And the reason, and that also reflects the fact that, the first halving brought the new amount of Bitcoin being issued from 50 to 25. Then it went from 25 to 12.5. Then it went from 12.5 to 6.25. So each halving obviously is like a total, like it's a 50% decrease from the previous inflation rate, but as like the inflation rate as a percentage of the total Bitcoin is obviously a lower and lower percentage. So we shouldn't expect a crazy 20x like we've seen in the past cycles, but yeah, again, it's very bullish, and it's interesting that, again, it's just like in 2020, it seems to be happening right when the sort of macro environment is expected to turn as well. So and obviously post Bitcoin ETF as well. So it's crazy how that happens.
Yeah, it is. So Jake, my associate here, just put in the chat, the halving number 1, November 28th, 2013, price at the time of halving was $13. Following year's peak, do you want to take a guess?
I think it was like $1,000.
Yeah, 1152. So that was a good one to trade around.
100x.
Yeah, casual 100x. The next one, halving 2, July 16th, 2016. Price time of halving 664. Following year's peak, 17,760. So I'm totally brain dead right now. That's
like a 27.
25 or something. Yeah, 25x. Halving number 3, price time of halving 9,700. Next year's peak, 67. So that's what, like 7x. So yeah, I mean 7x. Come on. I'd be curious to know, like, if we can draw a mathematical relationship here. I mean, it's like there is just a law of large numbers here, which is like, you can be bullish on Bitcoin, but also Bitcoin is almost $1 trillion in market cap. Like, if it goes up 7x on this halving, it's like a $7 trillion asset. It's 2.5 times the size of like Microsoft. It's like half the size of all the gold outstanding. It's possible. Hey, anything is possible. But like, at a certain point, you do run into like almost like the physics of assets, that like at a certain point, like it can't go up 7x every single time. But it is kind of remarkable that like it just keeps doing this. I mean, like the efficient market hypothesis, right, is that in markets are mostly efficient, but also information, once available, gets priced in very quickly. And in the case of the halving, this is something that's not only like available, like it's programmed into the actual asset itself. It's something anybody can know with 100% certitude, pretty much, is going to happen. So like, as far as being, information that's widely available, I mean, unless I'm insane, like this is something everybody knows about that's coming up, and maybe it should be reflected to some degree in the price. And yet every single time it doesn't seem, it rallies after the fact. Now, we can't necessarily isolate the halving as the reason for these 3 rallies. I would say probably for the first one, that was definitely true. But like in 2016, there was a different kind of market. We were seeing the rise of Ethereum and other blockchains, and everyone was really excited. 2020, we're talking about, DeFi summer, and then the ensuing, market rally that happened, lots of other innovation in Web3. So right now, there's the halving, but it's also not happening in a vacuum. There's a lot of really interesting context to this market, and plenty of reasons why I think people can be optimistic or bullish on what's going on. But yeah, like we'll see. I have to think that of the 11 ETFs that are now approved in the market, and some of them with their teams of salespeople who are looking for 5 reasons to, invest in a Bitcoin ETF. One of them is probably going to be this, right? Like they're going to say, it's digital gold, and it's used as a store of value, and it's super secure, and oh, by the way, there's this thing coming up called the halving, and when that happens, it's the stock to flow is going to go to 100, and that's going to be a reason why it's more scarce and better tokenomics and why you want to buy it. Like it's just like in a way, feels like a self-fulfilling prophecy of sorts, where people manifest this into existence, even though it in and of itself is not like a market moving event, because it's something we all should know about, right? I don't know. I've always been very conflicted on the halving thesis. I think the fundamental part is dubious at best, but the market momentum is clearly real because we've seen it happen before.
No, totally. And I actually did like a study, I think when I first got into crypto, and just back testing the momentum trading strategy. So momentum is like this thing exists in the traditional stock market. It's been studied a ton. There's huge amounts of academic papers on it, just talking about like how there's essentially stocks that go up tend to continue to go up, which seems weird, but at least on like a 6 to 12 month basis. And the reason why is just essentially human behavior. People don't like to buy stocks that have gone up a lot already, which makes them effectively somewhat undervalued relative to where they should be. And therefore there's like alpha to buying stocks that have gone up. But anyways, so testing that strategy in crypto, and it was just like crazy. Like it was just like it completely dominated the like the backtest returns were crazy without taking all the precautions to not overfit and things like that. So I do think like if the halving gets at least some people to buy the coin, and then that leads to more people buying, like, and because crypto is so reflexive and momentum dominates, it is kind of like a self-fulfilling prophecy in a lot of ways. And another thing too with crypto is as the price goes up, there's more attention, and therefore more people hear about it, and which again, this whole thing is like network effect dominated. There's more people building apps into it. There's more higher chance of things like an ETF getting approved. So there is, price does dictate fundamentals, and so I don't think it's too crazy to think that like if there's some pre-programmed event that gets everyone excited and therefore the price maybe goes up a little bit, it sort of kickstarts the whole fundamental sort of flywheel.
Yeah, exactly. I mean, I think the reflexivity is the key part, and you're referring to this concept that was pioneered by George Soros. Basically it's complicated, but the more price that goes up, the higher the price can go up. I guess it's like a flywheel effect.
It's like, and it's also like how like price has an impact on fundamentals, which then therefore justifies the price.
Yeah. Those two things have a reflexive.
Yeah. It's kind of like Tesla. Like Tesla, the price goes up, therefore they have a lower cost of capital, which then justifies the higher market cap.
Yeah, and also the more the price goes up, the more visibility they get for a company that doesn't pay anything for advertising, and the more cars they sell, maybe. Who knows? Yeah, very interesting. Speaking of Bitcoin ETFs and the price of Bitcoin, I know this feels like kind of a Bitcoin episode, but we did talk about stablecoins and DeFi in the last couple of shows. Bitwise, one of the issuers of one of the new issuers of a Bitcoin ETF, has announced that or is now providing the wallet address for the Bitcoin that it holds on behalf of customers. And I think that's really interesting for a couple of reasons, because as someone who used to market a Bitcoin ETF to people, mainstream investors do struggle with this idea of like, well, how do we know where the Bitcoin is? And how do you know that you can't double spend it? And how do you know that there's only 21 million? And these questions get asked. And I think for a relatively new, weird thing, like they are totally reasonable questions. Well, what's great about Bitcoin and other crypto assets is that there's this immutable, trusted ledger of transactions and of who owns what. And that's something that can be searched and audited and verified by anybody at any point in time, right? And so there are lots of ETFs where there's a third-party custodian, and maybe they're subject to an audit. But there are lots of other examples where the reserves, especially for like physical commodities, are not necessarily audited in the same manner, and there's no way to easily audit it. Like, how do you know that there's billions of dollars of gold held in reserve on behalf of a gold ETF issuer? Can you go to the gold blockchain? No. So who are you doing? What are you doing? You're trusting somebody, right? And so what's unique about this is that this is sort of a way for investors to gain comfort in a trustless manner about where the Bitcoin is, how it's held, and so forth. And I think that there'll be the first of many who decide to do that as well. And it would be interesting, I think, would be if we see like BlackRock and Fidelity and some of these other bigger companies do the same thing. And I wonder also if that plays into Larry Fink's statement about everything getting tokenized. This is a guy who oversees the biggest asset manager in the world, and he was talking on CNBC about how there are all these benefits to using blockchains as a way to move and store assets, including securities. One of those is this idea of proof of reserves, right? So if BlackRock wants to, eat its own pudding and talk, and do something that would reflect Fink's perspective on this, then they should totally do the same thing, right?
Oh, I'm on mute. Yeah, exactly. I mean, I think it is interesting. I mean, again, I would say you're the Bitcoin ETF expert. So I'm not. I mean, I've seen some interesting things. Like I saw, I think it was Van Eck as well was pledging to donate all of their earnings to the Bitcoin developers, which I thought was pretty interesting as well. And one of them also made a donation to Ethereum devs. So there's kind of all sorts of different ways to kind of differentiate yourself in the ETF space in terms of like branding, I guess, besides just reducing your fees to zero, which seems to have happened in the last kind of 3 months or 2 months.
Yeah, exactly. I think it was that they're donating a portion of it, which is interesting. And I mean, a portion of what? Like these funds have cut their fees to like basically close to zero. In most instances, there's either a 0% or 6-month holiday on fees, and then after that, it's mostly like under 30 beeps, 35 beeps, which I guess is they must be making money in that environment. Obviously, right now it's a loss leader. Like they're trying to gather assets as quickly as possible. Like there are costs. The main costs affiliated with this are the trading expense, but mostly the custody fees. So clearly, like custody fees on assets of a meaningful size have gotten to a level where there's some margin at 35 basis points. Also, I think that they'll be able to make money lending units of this fund out, like stock lending, the same way they do with their other zero fee products. But still, clearly there's the cost structure for launching an ETF has gone down since the days that we did it. And I think that also is a reflection of the fact that there are bigger, more mature counterparties and vendors, that there's more competition, fees are declining, and like all of that passes through to investors, and that is something else we should be really happy about. So all right, that's a pretty good sort of wrap up for this week. AY, I know that you've got a very busy one. We'll be back with more guests and other great content in the next little while, but if anyone can see this video, I've got this little modest beard going on. It's been going on for about 7 days. The beard will stay until Bitcoin hits $50,000. My associate, Jake Moody, who at some point should join us because he knows about as much as anybody on a lot of these topics. He's also growing his beard, and so the beards will continue until morale improves. So stay tuned for more beards and hopefully less beards once we get through that number. Until then, that's it. Did you want to finish with anything, Andrew?
Oh yeah, just shout out to Noble for hitting over 100 million in TVL.
Oh yeah, that's the DeFi decoded effect.
Yeah,
for sure. Gonna take credit. Gonna take credit for that one. Yeah, we had Jelena Djuric, the CEO of Noble, on. They're at 97 million. They're at 104, 7 million in a week, $1 million a day. So great pace of growth for that group. We're really pleased to see them having lots of success. Also, speaks to the demand for stable coins in all these different ecosystems. So very exciting times. All right, cool. AY, that's it for this week. Thanks everyone for joining us. We'll see you next time. Until then, I am Alex and I'm out of here. Bye.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.